Dr. Shahid Hamid is Professor of Finance in the College of Business, Director of the Laboratory for Insurance, Financial, and Economic Research located in the International Hurricane Research Center at Florida International University. Professor Hamid has also served as a director of the Master of Science in Finance program for over a dozen years. I'm taking this from the website, and these are all areas that are such interest to me, finance and insurance, of course. He has conducted research on a wide variety of topics, including hurricane loss modeling. We'll talk about that, vulnerability functions, the cost benefit of mitigation, homeowners insurance, a big one. And his recent research work has focused on the insurance and economic consequences of hurricanes. He has produced over 180 refereed academic journal papers, proceedings, book chapters, conference presentations, and technical reports. And I want to emphasize the level of expertise. We're really flattered that you're joining us. And I've seen some of your clips on YouTube being interviewed as well on some of the topics that we're going to talk about. He is a principal investigator and project manager for over a decade, leading multidisciplinary teams of over 24 current and past professors and experts, about 70 students in finance, economics, engineering, meteorology, computer science, actuary, geoscience, statistics. It takes all the expertise in all of these fields to put this together. This is in a project to develop, upgrade, and operate the Florida Public Hurricane Loss Model. So we'll be talking about that. This model has been used extensively by the state of Florida and by insurance firms. And you have done so much good work here. So thanks again for joining us. It's quite a list of accomplishments. And so you're certainly an important person in this field. So thanks for joining us.
Thank you.
I guess the question everybody wants to know from most of our clients and the public that we work with has to do, I guess, with the hurricane preparation, the insurance, rising costs of insurance, and you're basically like the inflection point where all of this comes together. Can you tell us a little bit about the loss modeling that you do for hurricanes?
Yeah, this is a model that was originally funded by the state of Florida. However, they had no role in the development and running of the model. And essentially, it's basically a state-of-the-art computer simulation model, thousands of lines of codes. And what it does is basically forecast or predicts when, where, and the hurricanes will form, what the tracks would be, what the terrain would be along which the hurricanes pass through, because the terrain affects the wind speed, the sort of structures and houses they're going to basically face when they along the track, the exposures, how much damage will occur to different components of the house, the windows, the roofs, and so on at different wind speeds, and how much it will cost to basically replace the damaged parts, and how much of it will be paid by insurance companies. So that essentially is what the model does. And the purpose of the model basically is to produce what we call average annual loss and probable maximum loss. And these are used by insurance companies and state regulators and so on to set premiums to cover the risk and to ensure solvency, reserves, and so on. And we also conduct stress tests on about 70 or so companies annually, different hurricane scenarios, and then we produce the output and give it to Florida Office of Insurance Regulation, who then determine what the state of solvency is for different companies and what sort of reserves they would need to cover themselves. And we also basically do scenario analysis, and then also estimate what the loss reduction would be due to different mitigation features. So that, insurance companies are not going to give you discounts just, out of the goodness of their heart or something. They sometimes have to be brought in kicking and screaming to give the discounts. So there has to be some scientific basis for, the discounts for mitigation. And we do some estimation. And there are other models who do it too. Essentially, this model has been around for about certified version of the model for about 13 or 14 years. And we update it every 2 years. It's certified by Florida Commission on Hurricane Projection Methodology, and they have established about 35 standards that the models have to meet in different fields. So essentially, it's been used extensively. Every rate filing that is brought in front of the Florida Office of Insurance Regulation for request for increase or decrease in rates. Basically, the exposure data for that company is processed through our model. We provide the output to OER, and that becomes one of the bases for determining whether the rate hikes or decreases are approved.
Are you familiar with how often these rate hike requests are asked?
We get annually about 67, anywhere from 60 to 80 rate filings, so that we have to process through. So I assume that is the number of requests.
This may be putting you on the spot. You don't have to answer this, but do you find that the data is used, or that the commission is pretty strict in approving those rate increases? Or I don't know if you have any opinions on that.
Well, I'm not going to make a comment on that. I mean, essentially, the Office of Insurance Regulation uses output from our model and perhaps some other model also. And that gives them some kind of scientific basis for justifying approval of rate increase or decrease. I think that's so the output is used extensively. I mean, they've used us 2,000 times in the last 14, 15 years.
Phenomenal. I'm comparing this to some other situations in insurance. We've had this in the health insurance with long-term care insurance, where companies have failed to properly price this and have pulled out of the market. And also they have to go to the state to get these increases for the same class approved. They're commonly approved, although not always. And it seems like there's a similar situation here where the free market, this is just incredibly expensive if there is a situation, that's the nature of insurance, to spread the risk around. But in Florida, obviously, with the risk, we've had enormous increases over the years in the cost of windstorm. You mentioned the solvency of companies. One of the questions I'm asked, and it could be almost for any insurance company, is, what are the chances of this company going to be around? How does it work if an insurance company fails?
Generally, I would say about 95% to 98% of the companies that we do stress tests pass the stress test, or they have passed it, but that is for some limited scenarios, historical scenarios and so on. What if Andrew were to hit us again? How many companies will survive and so on? So the passing rate is pretty high, but things have changed recently. The rates have gone up dramatically. I think in the last 5, 6 years, they've gone up by 100%. 3 years ago, the rates were, the average premium was $2,000. Now it's $3,600. So we have had dramatic increases. And
why is that, do you think?
Well, there are several reasons. The first, of course, the total premium is going up because the value of the houses have gone up quite a lot, and therefore the limits and coverages have increased. But even the premiums per dollar have increased. One is the increased risk of hurricane, and we're not talking about flooding because that's covered by NFIP and by another market. The second reason is the increased cost of reinsurance. So it's gone up like 10% in the last year alone or more. And the third reason, which is I think very important, is legal cost and lawsuits and fraud. In Florida, 76% of the property-related lawsuits nationally originate in Florida. In 2019, the insurance companies paid $3 billion in legal fees in that 1 year alone, fighting lawsuits. And naturally, they're going to pass that on to the homeowners and other insureds rather. And we have lawsuits related to assignment of benefit problem, particularly with respect to roofs. We have problem also with respect to wind versus flood issue. Only 18% of the property owners in Florida have flood insurance. which is ridiculously low in my opinion, given how cheap the flood insurance is. Whereas they have 90% plus, wind insurance. So when you have a hurricane and the damage may have been caused by flood, but you also at the same time have, uh, water damage through roof, through roof damage, then it becomes an issue of what really caused the damage. In many cases, property owners who do not have flood insurance would claim that it was done through roof damage or window water intrusion and so on, and they would claim for the losses that may have been due to flood. And that, it becomes a legal issue. Thousands and thousands of lawsuits have been filed. So that is an issue that we're also constructing a flood model, which is almost completed. And one of the issues that we hope to address in the flood model is come up with some kind of protocol or some ways of figuring out whether the damage, what came first? Was it the wind or the flood, water and so on, flooding? Was it rising water, or was it, water damage through roof or some other means? In order to answer the question of what was it flood. So it's a combination of factors. We have fraud, we have rising insurance costs, we have rising homeowner value, property values, and all that have led to increase in also increased catastrophe risk, assessed catastrophe risk.
I feel that also there is just an increasing risk of hurricanes in general from changes in the climate.
I think the main reason for the big increase right now is not increase in hurricane. We haven't had that much dramatic increase in risk in the last, assessed risk. The models haven't suddenly decided that the risk is so much higher that we need to double the premiums or it's really the large part of the, increase in premium, the total premiums due to higher property values and basically fraud, and also their insurance costs.
Obviously, for me in the financial services industry, there are always concerns about fraud, and often it does seem to be in Florida that we have so many issues here, and it costs us all. I think people have to realize that. Can you talk about some of the models again? We talk about, I think we've escaped most of Florida, some of the worst hurricanes that were coming this way, like Dorian, which really hit the Bahamas and then went north, and Irma, which was supposed to be much more of a direct hit through the center of Florida and went mostly to the Keys. And it's just, if it's coming from the south, it's hard to.
Yes.
Hard to escape.
Yeah. In fact, we have been lucky, to be honest with you. I mean, we haven't had really major hurricanes in the southern part of the more exposed part of Florida in the last 20 years, 15 years, 20 years. And basically, the worst case scenario that our model produces is a Category 5, large Category 5 hurricane coming from the south, moving slowly, slightly inland, so that the right side of the hurricane, which is more lethal, so to speak, is still on land, and going north through Miami-Dade, Broward, Palm Beach, and it's slightly inland enough to hit to affect Orlando all the way up to Jackson. That's a worst case scenario, and the insured losses, just the insured part, is over 150 billion. So when I saw Irma coming from the south, and originally it was Category 5, I was thinking of our worst case scenario. And fortunately, or unfortunately for the West Coast, it shifted to the west and less populated area, and it also was downgraded, and it didn't create the damage that we thought it might. So that's what you were describing. Something coming from the south is really the worst case scenario. It's the nightmare. The capacity of the insurance companies, insurance industry in Florida is about 60 to 70 billion. With the reinsurance, the catastrophe fund that we have, thank God we have a Florida Hurricane Catastrophe Fund. all the surcharges that, the bonding capacity and everything, if you add everything up, we have about 60 to $70 billion worth of capacity. Beyond that, if a hurricane costs more than, or a set of hurricanes in the same year cost more than that, then we are in trouble. Naturally, we'll need federal help. We'll need some other help. Also, if in Miami-Dade, for example, we have done some simulation. If you have a Category 1 hurricane, because of the nature of the deductibles, or the set of deductibles that homeowners have, 55% of the losses will be actually borne by the homeowners, because they're relatively small losses. Even for Category 5, about 15 or 16% of the losses will still be borne by homeowners. So, clearly, for some homeowners, and in between, it could be anywhere 20%, 30%. It's clear that there is a substantial portion of homeowners who would need perhaps outside help, some kind of grants or some kind of loans, and from FEMA or from the state government or something to help rebuild.
Issues I deal with, I have people who've paid off their house, they're in retirement or close to retirement, and they will ask me, should I drop the hurricane insurance now that it's no longer required? And I am so uncomfortable with that because of the risk, and it is just so important. But the cost is like, if I don't have to, the thinking will be, I'd rather spend this money on doing some mitigation than on the insurance. And I tell them not to do it, that compared to the value of their house, the insurance premiums, as expensive as they are still well worth it. And of course, I want people to internalize this somehow by understanding how they would feel when a Hurricane Irma is coming and they don't have insurance. So I don't know if you have any thoughts on.
No, they have to be insured. They should be insured, even if they paid off the mortgage. And I understand that the cost, of insurance has risen dramatically. I mean, I paid $3,500 10 years ago on my property. I'm 20 miles inland. About 3-4 years ago, I was paying $6,500. Now the bill that I've just came in is $10,000. So we have had dramatic increases in premiums, and I can understand retirees and so on would not be able to afford that. Naturally, they should have insurance. They could probably go with less coverage perhaps, or they could tweak or maybe reduce the water damage coverage slightly, or somewhat, I should say. That would reduce their premiums quite a lot, significantly. But they should keep their insurance. There are ways to reduce the premiums. They can work with the insurance companies to do that. They may have to give up some coverage. They may have to pay a higher deductible, but they should still have coverage.
Yeah, I'm so glad I may quote you on that then, because I tell them from a financial point of view, that's just too much risk. If somebody does want to try to reduce their risk in terms of construction mitigation, are there certain things that you think are
mitigation is important. Mitigation, I mean, we estimate, what the reduction in losses would be to do different sort of mitigation features. And the biggest is really nailing of the roof. So if you're getting a new roof, make sure it's not just up to code, but maybe beyond that they're using shank nails and 8D nails and things like that. Makes a big difference. You can have 30-35% reduction in losses if the roofs are more secure. Roof to wall connection, very important. Toenails do not work. You need to have clips, are not good, in my opinion. You have to have double strap and so on, very secure roof to wall connection. Similarly, if you have a hip roof, that's better than gable roof, gives you a better capacity. Shutters, you can have significant reductions, 15% or so, with shutters or impact windows and so on. So these are, these mitigation features can be substantial. In fact, if you put them all together, the sum of, the total is less than the sum of the parts, but still you can get 45% reduction in losses. And these do translate into reduction in premiums. So for example, in 2017, when I looked at the insurance companies and the premiums in Miami-Dade, the median premium for a $300,000 coverage for a house that was built in 1992 or earlier code was something like 13,500. And I'm sure it's much higher now. That's unmitigated house. At the same time, if this house was retrofitted and mitigated, okay, with shutters and some, roof and reinforcements and things like that, maybe window reinforcements, impact windows and what shutters and so on. The premiums went down to about 6,500. So you get a substantial discount if you have these collection of mitigations features. If you bought a house which was built on 2002 or later building code, the premium was 5,000. So these mitigation, if your house is mitigated, it can cut your premiums by more than half. Okay, and that is based on the fact that we can get, we have basically done wind tunnel tests, and we have done engineering modeling and so on, that shows you can get 40-45% reduction in losses due to some of these. We are developing at FIU, for example, we're developing new technologies. For instance, if you put a metal sheet along the roof edge or something like that, vertically, not very high, just a few inches, that can reduce the wind load and increase the capacity of the roof, because the roof is a very vulnerable part. But I mean, the bottom line is that when it comes to most of these benefits that I was talking about from mitigation, loss reductions, occur around category 2 or 3, 110, 120 miles per hour. If you have category 4 or 5 hurricane, category 5 in particular, all bets are off. I mean, all these mitigation features are not going to be as effective, and the loss reduction may not be as okay. I personally think that we have to really radically rethink our construction design. We have to move towards concrete roofs. Okay, we have no business having wooden roof in hurricane-prone areas. The problem is that these are not very attractive architecturally and so on, and to look at. You have flat hurricane roofs; they look pretty, they're dull and so on. We like to have sloping roofs with tiles on them. They look beautiful and so on. So what the engineers are trying to do, for example, at FIU, is develop these concrete roofs. We've developed a 1.5-inch thick, not very thick, pretty lightweight roofs, concrete roofs. We built sloped somewhat, and we created waves on them. You can paint them to look like barrel tiles, and you put those waves in there, and their load capacity increases quite a lot. We tested them up to 250 miles per hour, and I think that's the way to go. We should replace the roof, wooden roofs, and move on to concrete roofs. They don't have to be flat; they could be designed to be sloped, and I think that's the way to go in the future. And we'll have to do that, because with climate change and everything, they're predicting that if not the frequency, certainly the intensity of the hurricanes, we're going to get more major hurricanes will increase.
Do you find that some of the private companies, I think, are trying to use this research to develop products like that?
They may be. It's not easy to sell them right now. Okay, in the construction industry, really hasn't bought into it. I mean, when I was purchasing a house in the 90s, I was offered in some places in the newly constructed house, safe room with concrete roof in it for $5,000, $7,000 extra, and the builders were telling me that they couldn't sell them. So they quit offering it, quit including it. But those sort of things, of course, the safe room is going to be great for your personal, survival, but it's not going to do much for the property, so to speak. So the point I'm trying to make is that at some point, the builders have to be convinced the product, the replacement product, the concrete roofs and all that have to be robust, convincing, and they have to be designed to be attractive. If that happens, then I think, we would move towards that. I mean, we have concrete buildings in in Havana, in Puerto Rico, and so on, that have survived multiple hurricanes over the last 100 years, 50 years, 60 years. Not stone buildings, concrete buildings. And I mean, we need to move towards something like that.
Here for Hurricane Andrew. In fact, got to South Florida a year earlier, and it was like a before and after. And it seemed to me that after Andrew, that changed so many things with the codes and looking at impact glass. And maybe it will take another kind of a disaster like that to get the code improvements towards concrete roofs. But I just, do you have any thoughts?
Well, I mean, we have the strongest building codes. I mean, the building codes are great, and every 3 years they're updated. But still, for Hurricane Category 5 hurricane, it's not enough. I mean, of course, the probabilities of getting hit by a Category 5 is relatively low. We had Andrew, but nevertheless, if the predictions come true about increased intensity of hurricanes and so on in the future, then I don't think we'll have a choice there.
Well, one of the things
we also have to elevate our houses. I mean, build, elevated houses, very important for flood.
We deal with that when people are making financial decisions about where to move and what things are going to be like in the future, particularly condos after the Champlain Towers collapse. And even now, all of the inspections in some of these older buildings to make sure that they're not postponing all of these improvements. And it seems like that could be an issue after usually a disaster. It seems it takes something like that to get people moving.
Condominiums, at some point, we may have to restrict the height. When you have Category 1 hurricane at the surface, around 10th or 15th story, you're going to have Category 3 hurricane. If it's Category 3 at the surface, you're going to have Category 5, 20, 30 years, stories high. Because the winds go, speed grow exponentially with height. And it's not the fact that you expect a structure to collapse, because these are concrete buildings and they have concrete roofs and everything, but it's just that the water intrusion becomes pretty, significant. And it not only just, through all the breaches, through the roof, somehow, no matter how, watertight you make the building, it still seeps in. And when you have a big hurricane with a lot of rainfall, water is going to propagate from floor to floor, and it's going to. So we've had instances where, for example, in Melbourne, Satellite Beach, and other places, we have had buildings which, in 2004, 2005 hurricane, they look fine from outside, but they had to be condemned because there was so much water damage inside. So that is something that I think more research needs to be done. But perhaps we may be forced to restrict the height of condos, the number of floors, and so on, because just once you go beyond a certain number of stories, it gets pretty dangerous.
When people are paying all of this money on the hurricane insurance, one of the questions we touched on it a little bit with solvency is are these companies going to be there? And another issue I have, because I've seen it before. I think that the first company I had for hurricane insurance, if I'm not mistaken, was Nationwide, and they pulled out of the market. And companies have been pulling out of the market. Yes. And of course, we have Citizens, and it's like the insurer of last resort for the state, and they have to be the most expensive to not compete with the private market. And I guess, do you have any thoughts on the state of the insurance market, especially if there is a big storm? Will they go out? How will this work? Other companies assessed?
Yeah, as I said, we do have $60 billion to $70 billion capacity. The state is not good in terms of profitability. Insurance companies' profitability has gone down. There are underwriting losses and so on. And if the insurance companies had, I think some of the insurance companies, if they could, they would leave. It's not a very attractive market. But at the same time, the premiums has gone up a lot. So they are making, it depends on what the frequency is. The hurricane will be in the next few years. But the point is that insurance companies, when there's a lot of uncertainty, they're going to charge probably the highest they can. They're not going to go with the mean loss or something like that. They're going to go, above the mean loss and charge higher than, if there's more certainty. And that's just the uncertainty premium the homeowners have to pay. But the insurance industry is not as bad as you think. They still have capacity. They have the Florida Cat Fund, when the total amount of losses, aggregate losses, exceed 7 billion or something like that, there's a trigger, and then I think the capacity of the Florida Cat Fund alone is about 17 or 18 billion dollars ability to pay. They have they can impose surcharges. Even Citizen itself has the ability to impose surcharges on to cover their losses through surcharges on other companies, and not only just the homeowner line of but other lines of insurance. So there are ways of, but ultimately it's going to basically be the people of Florida who will pay through surcharges on other insurances, and auto insurance or life insurance or whatever, and through other means they will end up paying. So it's the insurance. I think another important way to transfer risk for the insurance industry is to use the capital market. The worldwide stock market value has gone down to much over $100 trillion, and bond market is over $100 billion. So the capital market, you have basically a $1 trillion increase and decrease in the value, paper value of stocks and bonds in a single day. Okay, they can absorb $100 billion loss easily. So, and there are vehicles to transfer that risk. You have cat bonds, you have insurance-linked securities, and so on. But the total amount of cat bond that has been issued, or insurance-linked securities since the 90s when it started, is about 138 to 140 billion dollars. It's not enough. And these are usually short-term bonds. And they were, because the stock market was doing so well, has been doing well relatively, so these were not such an attractive investments. When the stock market is not doing so well, the yields on these bonds would become more attractive, and perhaps they'll be more sought after. But that, in the long run, that's another way of transferring risk, from, say, Florida to the capital market. But there has to be some kind of incentive for the capital market to do that. Okay.
Like they say, necessity is the mother of invention. So we'll probably see some innovations, financial innovations, yes, construction innovations, all sorts of, it seems like it always takes something to trigger that. And, well, here we are in hurricane season, and the interest in this topic is enormous. So I would thank you for the time. Your time is so valuable. We greatly appreciate your sharing your expertise, your experience with us. I know we'll get some questions, so we'll not burden you, but we'll try to follow up with people. So Dr. Hamid, thank you very much for being with us today. We greatly appreciate it.